Okay week, Aisha. Frankly, if you ask me, if I look at the real numbers and if I look at the real market action in large cap stocks, given that last week in middle of the week it appeared that banks participated, and then we had good flows on the FI front. Market, at least for benchmark indices, we saw a very flat kind of a start. And while last 2 weeks were about the election outcome adjustment, flows, bout of short covering, and massive comeback by retail investors, I guess markets now in next 2 weeks or next 3 weeks are likely to change gears, which is views and liquidity, which have dominated the market in last 2 weeks. It really would be news and earnings. News in terms of next month you have budget and earnings, and then progress of monsoon. So rather than technical factors and liquidity factors, I guess markets are likely to move from opinion which would be formed basis on data, not on basis of liquidity, and that I guess could really be the change in terms of the market orientation. Now small cap stocks, you can argue back and say that okay, will the party continue? They're in a good spot, but do you chase the small cap stocks now? The answer to that is no. I see the following construct, Aisha. Global cues are also strong. Let's not undermine that, okay, this is only an isolated India rally. So global markets are strong. Last 2 weeks it was about views, flows, short covering. Next 2 weeks it could be results, budget, and it really would be hardcore macro news based on monsoon which will drive the market. So it will not just be pure liquidity. It will be perhaps the news and the impact of that on individual stocks which will set the tone.
Yes, indeed. All of those factors will closely be monitored by the market. Those are some of the important cues for the week ahead. But for the month ahead rather, but let's find out what's in store for the week ahead in terms of cues. Of course, you do have your monthly F&O expiry, but it's also important to track some global cues as the consumer confidence, the new home sales and jobless claims, some data coming out from the Eurozone with respect to the economic confidence, the BOE financial stability report, UK's GDP print, and then the first session of the 18th Lok Sabha as well that will take place, Nikunj. That will be some of the important cues.
If you take F&O expiry out of the equation, there is nothing big at least which is anticipated this week. But F&O expiry, I guess, would be important considering that next week, from next series, we move into what really could be called as the earnings calendar. And then for the next expiry, the budget really would be at play. So considering that this series has been an eventful series, this week's expiry in terms of what the directional sense we would get, I think would be important. Also, let's look at the FI flow. For me, that also is important. It is not a cue, but it is a data point which markets will look at. And this is where, if you frankly ask me, that number of 19th of June, it appeared that foreign institutional investors were really back with the bang. And the precursor to that on 14th and 18th of June also, those were impressive numbers. But if foreign institutional investors do not come back, then there would be a crowd which would be disappointed, because a lot of market men had leaned back on the bullish side post 18th and 19th of June when the FI data came out, and which also coincided with the rally in the banks. So if you're really looking at one moving part, this week that moving part really could be that FI flow picture, which in a sense will be a mood indicator of the near-term direction. Why did banks go higher? FIs came back. Why FI back? Because they were short on India. But that number has not translated into any great, what should I say, great picture so far. Even from 4th of June, the FI number is not very impressive. So for me, that in a sense becomes a near-term talking point also, that if FIs are back, if they are back, why the numbers are not reflecting, and when will the numbers really start reflecting, and if the numbers start reflecting, will banking stocks they rally? That in a sense is a short-term mood point which you need to consider if you're really looking at the near-term market action.
Oh yeah, absolutely. Well, over the weekend, there was that much anticipated GST meeting as well. And as per the latest recommendations of the council, all milk cans and cartons will be brought under the 12% GST slab. At the same time, a select section of working and student hostel accommodations may get exempted from the ambit of GST. Hear out what the finance minister had to say.
Council recommended to prescribe a uniform rate of 12% on all milk cans, meaning steel, iron, aluminium, which are irrespective of the use. They are called milk cans, but wherever they are used, that will be the rate applicable, so that no disputes arise out of it. Council also recommended to prescribe a uniform GST rate of 12% on all carton boxes and cases of both corrugated and non-corrugated paper or paper board. This will in particular help the apple growers of Himachal Pradesh, the apple growers of J&K, whose request it has been for quite some time. The Fitment Committee has also recommended it now. All types of sprinklers, including fire water sprinklers, will attract 12% GST, and to regularize the past practice on an as-is whereas basis. Council recommended to prescribe 12% on all solar cookers, whether it has single or dual energy source.
All right, that is the Finance Minister talking about some of the key recommendations in the GST Council meet. And Nikunj, anything standing out in particular when it comes to reinsurance and general insurance as a space?
Well, nothing incremental has come out. See, GST Council meeting, I mean, everybody was expecting that something very meaningful and large would actually come for the entire, gaming space, so to speak, online and offline. So nothing's come on that. Directionally, there is a mention that, okay, petrol and diesel, they ideally should be part of GST, but that's always like a difficult topic where I don't think any near-term decision would be taken. Now, specifics for insurance, there is a bit of a relief, but if you ask about poultry machines, sprinklers, milk cans, those are not very important in terms of a market-moving news. But directionally, what it also means is that somewhere if you look at the GST rates in India, the GST rates in India, I think, are now becoming more neutral, more towards 12%. The high peak rates actually are coming down. So for me, I think the key takeaway is that the peak rates in GST, they've started coming down. More and more categories, I think, are getting added in what really could be called as a middle slab. So directionally in coming days, if one imagines that the GST rate will start coming down in all the categories where currently it's higher, I think it will take it is a progress in the right direction. From a market standpoint, little bit of here and there for insurance and some reinsurance stocks, and that's about it.
Yeah, all that buzz and anticipation around the fertilizer sector, the gaming sector. The finance minister very categorically said that the group of ministers on online gaming will be submitting a status report on rate rationalization, and that they're going to initiate a formal discussion on rate rationalization only in the next council meeting. Similar, GST exemption on fertilizer products has been referred now to the group of ministers, and the provision exists to bring petrol, diesel into the GST Act. The decision regarding applicable rate is still pending. By the way, the next meeting is going to happen on mid-August, and the finance minister started off by saying that they could not take up some agenda points due to the paucity of time. So yeah, I guess all that trade on fertilizer and gaming that you saw all through last week, maybe that could get reversed. But then one's wondering, what's the strategy for the day? Because you've got expiry to deal with. It's going to be an important one just ahead of the budget next month.
So Aisha, if you're long, you don't cut your long just because markets have rallied. If you are planning to initiate trades in small and mid-cap stocks now, this may not be the ideal time. So rather than chasing the market, stay with the market. Rather than trying to rotate it, I think it is time to maintain status quo. Sometimes doing nothing is also a strategy, and I think in this kind of a market, after the recent rally, doing nothing and not selling and staying with the market, and rather than trying to preempt the next 100 points or 500 points in the Nifty, may not be the best strategy. The odds are, the technical odds, which is in terms of flows and the global cues, they are favorable. But soon market will move into from technical push to the news flow news flow bracket, and that is where I guess markets may entirely hit a pause button. See, you cannot be bearish in this market because global cues are strong. You cannot be bearish in the market because local participation is strong. But after the recent run up, if you're trying to chase the market, maybe the risk reward ratio in the near term is not there.
If you like this video, then like, share and subscribe to ET Now.